Hey traders, Raghee here, and in this recap I'm actually going to take you through some current intraday trades that we are watching right now. I love sharing these current trades with you guys, and we'll follow up on a lot of this in the premium video and in the chat room tomorrow. So let's start off with cocoa. Now cocoa was a market we were looking at fading around the 1995 area, 1990, and here it is above 2000. Now for some of you who took it, what you're waiting for now is a rollover. So let me show you how a wave rollover works. Number one is you want to see the market reach an area that is expected to be resistance. We didn't stop at the level that I wanted to see, but this trade is still a viable intraday trade. So what I'm going to be looking for is this market to essentially roll over, hence it's called a wave rollover. So roll over through the bottom line of the wave, or more aggressively, the bottom line of the box. And, conservatively, would it be better to see this market print 1997? Yes, that would be better. So there's a couple ways you can do this. If you're still in this market and you're looking for what I call a guidance trade, insight into where the market is, where the market is going to exhaust. I've got some other traders hitting me up right now. Don't they know I'm recording the recap video? Okay, so I'm looking for where the market will roll over through the 1997 level, preferably with a negative 100 or greater CCI. Another intraday trade is the wheat play. So sometimes when the market is at levels that I don't trust longer term organization, in other words, I don't want to commit to a longer term time frame, the shorter term intradays will work just fine. And that usually for me means a 60-minute time frame or less. So here is a trade on wheat that I'm looking for follow through to the upside after a wave reversal has triggered here. Now, I don't mind this kind of action after the wave reversal trigger because, quite frankly, we've just kind of gone into the doldrums, but this is where we trigger, and this is actually a very reasonable area for this market to bounce around in. Why would I take a 60-minute wave reversal buy? Because it was either that or to play the 200 period simple moving average on the daily. Well, the way this market's been heading lower, my trust is pretty low. So why not, instead of playing the exhaustion in this area, let this exhaustion prove that there's some momentum, and that momentum play would be the wave reversal. So there's a look at the wheat market. We're also interested in sugar. Now this one gypped us by a penny. We were looking for a 1465 entry. Now we've already taken this one for a winner from a similar level, looking at 1435 and played this one down. So this was already a good winner. And now we're just what I call recalibrating and refiring. So I'm actually looking at the market to exhaust back down into the range. And the 64 high did not tag our 65 limit order to short. I'll still leave that thing out there and try to take advantage of the play. Next up, I'm going to take you through the coffee market. Now the real had a weak day. I think there was very little narrative behind some of the moves in the softs today. So I like the fade of some of these dramatic moves. Keep an eye on the Brazilian real. It could be a very interesting narrative behind some of these moves, especially coffee, sugar, cocoa, and all three of which I'm watching. Coffee is at an interesting level where I've got this ability to look at this high within a choppy market with a lot of bullishness. I don't want to bet on this long term against what is maybe a fresh uptrend, but I think there's a really good chance to look at a 15-minute reversal. So again, the time of day that we're looking at this, I'm not going to be surprised to see us bounce around in a range, but this market has definitely rolled over and broken key levels that we're looking at. So that would be the short that triggers in this area. And, whether if it bounces around here, that's fine, as long as it doesn't exceed the high. Very short-term time frame. Again, trying to take advantage of exhaustion here by playing bearish momentum on a 15-minute. Now, I'm going to bring you to a setup that we've already played a trade on shorter term, and that's the 60-minute copper market. We already bought the 2805 level, 2.805 level, and rode that up higher to basically the doorstep of 2.9 And now this one is looking like it might be ready to make a rollover as well. Now this one doesn't have the same kind of setup, but we've had an extreme move on to the upside on the daily. So let's go take a look at that. And you'll see that if you are one of those traders that are wondering, okay, could we go down and head back to that 28.0 whatever level down in here, about a 50% move, how would we play that? The wave reversal down to this level would be a very interesting way to do it. And we actually played 2.8505. Sorry, we played 2.8505. 2.8505. That's what we played on the 60-minute, not 280. 2.8505. Nice move to the upside. And now what am I looking for? Hey, let's just see if we can't take this roller coaster back down and then refire another intraday trade. These intraday time frames are really powerful ways to take advantage of markets making higher highs when you don't want to be relegated to the greater fool theory of hoping that someone puts in a higher high after you buy the high, or the low for that matter. When you see resistance levels or support levels that you think may hold, sometimes go take a look at the intraday time frames to get the nuance of it. And that's today's recap. Copper, coffee, sugar, wheat, and cocoa.